Welcome back. We're talking markets now. Adding to the low volatility environment in markets, hedge fund research is launching a new set of indices focused on risk parity, which is an investment strategy that shifts holdings based on volatility. Joining me now in a Fox Business exclusive is hedge fund research president Ken Heinz. Ken, good to see you. Thanks so much for joining us. Yeah. So there hasn't been any volatility in this market.
No.
How does this work?
Yes. So the risk parity strategies are they're operated by a lot of the same hedge fund firms, but they're a different strategy. They basically are creating 4 different buckets in their portfolio: equities, fixed income, currencies, and commodities. And then they are assigning, and they're allocating to each of them at a target volatility level for the investor. The goal of these is that investors either can get performance that exceeds that of the equity markets with the same level of volatility, or matches that with a lower volatility. That's what the institutions are trying to get.
What are the institutions doing right now in terms of markets? Obviously, this market is still up 20% since Election Day. But yesterday we saw markets turn on the heels of the news out of Washington.
Yeah, I think people are... Institutions are legitimately concerned about how many days in a row do we see record equity prices. And I think that at this point they're trying to position for an environment. I think that these risk parity strategies allow them to do that, where they're diversifying out their portfolio. My friends over at NEPC put out a report that said 68% of endowments and foundations have greater than 10% of their portfolios in marketable alternative investments.
Alternatives. So alternatives, it could be private equity, it could be something else, but not stocks.
Not stocks.
So people, hedge funds, you're saying, are getting worried about these valuations in stocks.
Hedge funds, mutual funds, risk parity, risk premia, real estate, those are the things that we're seeing the trends towards increased allocations.
And in terms of allocation within equities, where is the exposure for large institutions, would you say? Because technology has been the group that has obviously been leading this market, even though in the last couple of days they've rolled over a bit. Is it tech? Is it other sectors that you can name?
I think, tech has been the flavor of the last, I would say the last 2 years.
Even for hedge funds?
Yeah, for sure. But I think that there's certainly, you've seen a lot of activity, also a lot of hedge fund activity in the retail space. And with all this shifting landscape of retail, of people moving away from your traditional brick and mortar stores, where you had the big deal with, with Whole Foods and with a number of other things, where that's really shaking the foundation of retail. And people are legitimately asking questions: in 5 years, what is retail going to look like from an equity valuation perspective? Are these stores going to all go away? That's what a lot of hedge funds are thinking about.
Is that what institutions are betting against, retail?
Yeah, a lot of fund managers are positioning for this shift and saying, is there going to be more people like Amazon that are growing in this space? Is there going to be more downside in a lot of these brick and mortar stores? Those are the things that institutions and hedge funds are really thinking about right now, as you're seeing M&A transactions really validating this back and forth themes.
We've been talking about the president and what has taken place this week, the business managers stepping off of the council, the president disbanding the 2 councils. Do you think that gets in the way of the agenda and tax reform? And how important are some of these economic policies that the president has talked about so much for markets and for the continuation of these gains?
I think they're very important, and I don't think that the last few weeks, or the last few days really, that have been defined by this flare-up and interracial tension should really get in the way of that, because the economic agenda is something that everyone in the U.S. stands to benefit from. These issues that have come up, that have resurfaced in the last few days, they're not new to the U.S. for sure. These were with the last presidential administration, and I would be willing to submit that almost every president has at some point in their agenda dealt with these issues of how do racial tensions, how do we feel about them? And it's a very delicate, complicated issue, but in terms of whether or not that should not be allowed to get in the way of the broader economic agenda of tax reform.
I
think it's going to happen, and I think it has to happen. It's very important, and it should happen.
All right, we'll leave it there. Ken, great to see you.
Thank you, Mary.
Thanks so much for joining us. Ken Heinz there.